welcome to Scrolling with Ceazor. Today is February 3rd, 2026. I've got lots of tweets for you today, so let's get right into them. But before I do that, I'll remind you that this is not financial advice. These are all my biased opinions based on the tweets that I have found today. Okay, so let's kind of get through them and get it done. Okay, so first one here, we have a tweet by ETH Strategy. Not really trying to explain what this is. It's just some good wholesome music about Vitalik airdropping. I don't think you can hear it even if I put it on, but it's basically the Doors just singing, and he's doing like an airdrop of like boxes and stuff like that. There's no airdrop from ETH Strat, but there's a product called the ESPN. I did do a video on it, so you can check it out and find out how it works and so forth. Okay, moving on. Here we have some juicy news. This is pretty funny, actually. Like when you first read this, it says, if you're looking to buy a mansion someday, sign up for Aave.app. So you can do that. Like if you have an Android phone, you kind of have to get on a wait list. But if you have an iPhone, you can do it. I think it's kind of like a harmless like thing to do, right? But when you see this tweet, you don't really see much, but let's get a little bit of context. So if we go over to the next tweet, we have Gabriel Haynes talking about Stanny, the same guy from Aave, right? Talking about how he just bought a $20 million mansion in London, right? So in order to buy a $20 million mansion, you need to have $40 million because you have to basically liquidate assets to fiat, and then you have to pay tax, which is probably around 50% in I don't know, maybe he bought it through his corporation or something. I don't know. There's loopholes and little tax tricks and stuff like that. But he's basically like asking like, hey, when can I get a mansion and stuff like that. But anyway, so apparently the news is that he got a mansion in London. And this is how he replies to all the FUD of people like complaining. Is like, if you want a mansion, sign up for my app, right? So it's a little distasteful, in my opinion. Like, I don't know. Like, I'm a pretty conservative person. I don't think anybody really needs a $20 million mansion. But mind you, if you have hundreds of millions of dollars, maybe I would be singing a different tune, right? Anyhow, let's move on. So here we have Andre Cronjes talking about Flying Tulip. I did a Flying Tulip video on what Flying Tulip is, but I also did a Flying Tulip video on the sale. Now, the sale is what's really important here. Like, I'm not trying to tell you to go and participate in the sale. And besides, you would have already had to set up, your eligibility. I will be participating in this because it logically makes sense to me. There's a lot of hate on Andre all the time, and I'm not going to defend him or his past. I'm just going to talk. I'm trying my best these days to make purely logical decisions, even though historically, there's a lot of hype and a lot of talk about, what matters is what people think instead of what is the reality of the logic or the math, right? There's a lot of that, but I think crypto's kind of converting or changing away from this a little bit to something a little bit more logical based. And in the past, I've ghosted things that I regret ghosting purely because of like my opinion of founders and stuff like this, of the things they've done or the interactions I've had with them and so forth. And I want to try to kind of get out of that shell. Now, I'm definitely not going to put a massive amount of money into something like this, and I never do. But I feel like it's logically sound because it's like a lossless token sale. Like, you can't lose your money unless the only thing you're pretty much giving up is yield, right? So that's what I'm doing. So you can check out Flying Tulip. You can check out my videos on Flying Tulip and the Flying Tulip sale to better understand how this works. But it's like, he says it pretty much here. If the token performs well, you profit. If it doesn't, you get a refund. Like, it's as simple as that, right? So I don't know, like, anyhow, you do you, and you think about you. But I thought I would share that, like, this week the Impossible and CoinList are done. Next week, supporter and intent whitelist is on Flying Tulip, so you can go to the Flying Tulip website and see if your eligibility is open yet, and so forth. But anyhow, let's move on. Here we have FX protocol. This is a protocol I've kind of recently discovered, and I knew it was always there, but I kind of went and digged in deep, and I really like these guys. I really like this protocol. And then I did reach out to them, and I asked them if they would like to sponsor, and they would like to sponsor my podcast. So that's fantastic. So I'm a little bit more biased now than before. But anyways, there is this article here about something that they've done. Like, it doesn't say in here, so I was talking to them, and they told me that on Base they have upgraded the contracts to the 4004, the basically the AI compatible ERC20 standard, right? Now, in order to do the mainnet one, it's going to take a little bit more work because there's a substantial amount of TVL, and it's kind of spread across different protocols and stuff like that. So I'm not sure if they're going to be able to do it with like on mainnet, but on Base they've done it. So you can read through this article. It's really good, and it's like, in my opinion, it's indisputable. Like, the message that they say in this article, you can't dispute it, I believe. So it's like the great decoupling, why AI agents won't use human money. Now, you can read through this, but there's a lot here. But there's the main key thing is that agents are going to want certain things. So this is what this article basically says here. So agents are smart enough to choose systems that are verifiable on chain. So they don't want like some stablecoin where individuals are pulling stables out of the backing and sending it to Binance to do high frequency trading. Like, the AI agents aren't going to accept that, right? Minimally trust based, resistant to human intervention. So they don't want contracts where a human can come in and change settings as little as possible, right? They're going to accept that. And the more human intervention possibilities, the less likely these AI agents are going to use it. So something like FX protocol, or even like my other favorite, Liquidity. Like, AI agents are going to love these because the humans cannot make changes, especially with Liquidity. Like, they can't even add collaterals, right? So that's what it's basically talking, and designed to survive stress tests, not just growth. So you can read through this, and I think it's a fantastic protocol, and I do think people should consider it as at least some of their holdings or some of their CDPs. The no liquidation factor is like, well, I wouldn't say it's unliquidatable, but the liquidation protection features in this are quite nice as well. So moving on, here we have Clouted. Clouted is a one of the founders of ETH Strategy here, and he's got this tweet out here, and it reads like parody, but I believe it's true. Okay, I haven't asked him, but I do believe that this is actually honesty. Okay, so let me read through it. Okay, so it says, okay, serious post. ETH is now $2,300. Which is now it's about $22.50. I'm looking to sell a 4-year call option on ETH, up to a notional value of $20 million. Strike and premium will be discussed by credible buyers, all on-chain and fully collateralized with audited smart contracts. Okay, so that's important, okay? So he's not saying, hey, let's make a deal, trust me, bro. He's actually like saying, we'll put the smart contracts on the blockchain, and the assets will be inside there. The ETH will be inside those smart contracts. It will be priced cheaper than anything you can buy on the market if they price 4-year calls. So finding a 4-year call option is pretty hard outside of the ETH strat. Serious offers, all desks, funds, investors, whales, options traders, etc. DM me or reply to this. If you find me a buyer, I'll even give you a small finder's fee based on the notional value of the option they buy. So so you can check that out. especially if you're a whale, and tell him Ceazor sent you. Okay. Anyhow, so let's move on. Okay. So here we have Sam from Rise, the CEO of Rise. He's kind of just sharing this this tweet, this like leaderboard system where, like, because right now there are some people who are trading perps on testnet, this Rise X testnet trading competition, and you can win $10,000 by practice trading. So so you lose no money, and you practice trade on this app. You give them some feedback, I guess. If you're using it, you might as well give them feedback, and you can possibly win $10,000, and it's worth trying. Okay. Now, I'm a little bit biased on Rise Chain because I like them. In the past, I was kind of helping them out, but these days I'm not really helping them too much. Just kind of sharing some stuff. And yeah, so you can check it out. I've told myself this year that I'm not going to do any perps tradings, even fake perp trading like this. I want to try to stay away from it just for my own health and my own sanity. But if you are so inclined, then you can try it out. Okay, moving on. Here we have Trueo. Trueo is the new brand name for the True Markets. Now, True Markets, I do have a video on it, and I'm biased in this because I am a tester at this protocol. It's basically a prediction market, right? But they went through this like trademark dispute, and they just like say, what, screw this. Let's, instead of fighting over this name True Markets, let's just like transition to the name Trueo. And that's what they did. So now they've transitioned over. So if you are a True Market follower, then I would suggest you to follow Trueo _ app instead, and you can do that. So and yeah, check it out if you would like to do trading. If you like to trade prediction markets, you can check out this app. It's pretty cool because, like, if you set up limit orders, so let's say a very good example is, let's say you buy you bet on something like Elon will go to China next week, or whatever the heck, whatever the thing is you decide to bet on. So you buy a yes or you buy a no, right? And then if you put those yes or no's into limit orders to sell them, then you're gonna gain APR in OP tokens. So there's a lot here. You can kind of read through it, but there is some key factors. Key thing I want to talk about. Like, they had this dispute about the trademark or the name of the thing. However, like it's immutable. Like, it's smart contracts. They can't stop it. So they kind of just, it just kept going, right? Okay, so they can change the name, they can change the front end, but it doesn't change the underlying engine. The engine is still there. It's still the same engine. So it has like almost no effect on anything. And now this True Market's the one who, like, basically told them to stop using their name. They're something completely different. It's not a competitor. So I don't know why it was such a big deal. But anyway, so they're back on CoinGecko. The True token's back on CoinGecko. There's a lot of stuff here you can kind of read. So where's the one thing on it? So this is the key thing here. So on True Markets, you can bet with True Yield Dollar, which is quite nice. And this is like a collaboration with Yearn Finance. So it's an interest-bearing stable coin. So you, instead of betting with USDC, you can bet with USDC that has roughly 3 or 4% interest. So your bet is increasing while you're waiting for it for the truth to come out, right? Or you can exit your position and gain that yield while you're sitting in the position. So you don't lose that opportunity. There's that opportunity cost. Okay. So hey, check it out. You can check through this. It's not really, you don't really need to read it, but it's important to understand what happened, especially if you just see like, well, why did this thing change, right? Okay, moving on. So here we have Gabriel Saprio. He's our favorite crypto lawyer. He's tweeted out something here that is kind of parody because it's kind of like a rephrasing of something that was said in the past. But let's read through it. It says, tokenizing an asset makes it safer always, especially if you use an NFT. If you make an NFT of a real GPU and the GPU itself gets destroyed in a fire tomorrow, you still have the same asset. Because the token still exists in a limited supply, just as before, nothing has changed. What the NFT is doing is a concept of the asset. Few understand. Now I think he's being sarcastic here because it depends on the utility of that NFT. If that NFT was created as backed by the GPU, so at any time you can take that NFT and you can submit it to something and they will send you that GPU, then what he's saying is ludicrous, right? They'll send you you're basically scamming then, basically, because your GPU was destroyed in a fire, but you still sell someone a receipt of ownership of that GPU without telling them that it's actually destroyed. So there is obviously a scam there. However, that's not necessarily the case. Like, it can still trade. There might be sentimental value there, or even some sort of kind of gloating rights, whereas like I own this crazy NFT that's backed by a melted GPU and it's still trading, right? So there is the possibility of this being true, but at the same time, I think he's just being sarcastic, okay? And someone did say this in the past about some other asset that I don't remember who said it in the past, but it was something else, but basically something like that. Okay, moving on. This is kind of interesting, okay? I've got kind of a lot to say on this. So if here we got DeFi Investor talking about the Pendle token, right? And how it moved drastically and now it's back down. And as you can see, it's a pretty volatile chart, right? This Pendle token, and Pendle undoubtedly has found some product market fit. They are not the first protocol to design this Pendle system. There was another protocol, I think it was called AP Wine, that was first. However, they didn't have the business development and the DeFi know-how or connections to be as successful as Pendle, right? But so let's kind of read through what ZeroX Serial says. Okay, Pendle is a good example of how people misread comebacks. It wasn't just price going up from the lows. Something changed underneath. Yield stopped being passive. Rates moved. People wanted to lock yields, speculate on future rates, separate principal from yield, manage duration. Pendle sat right in the middle of that shift. So the other one came out before people started wanting to do this, and obviously Pendle executed on these desires perfectly, right? And that's why it worked. Not because it was cheap, but because the market needed to kind of tooling at the moment. When people ask, what's the next Pendle? I think the better question is, what part of DeFi is becoming painful and inefficient again? The big runs usually come after that point, not before. So there's a very good point here. Like, it's not about like finding that one token that's going to pump. It's about finding the protocols that fill the need of what people want, or the pain points people have. And there are lots of those. There's a lot of them, and it's so hard to figure it out. I don't like to buy any tokens. I only farm tokens for the most part because I'm scared shitless and I'm risk adverse, right? I believe being in crypto itself is enough risk than to drop 100K on some token that's down 90% or something like that. I'm not saying Pendle won't recover. I don't know, but I'd rather not make that bet. I'd rather just, like, if I could, I would farm Pendle tokens and then maybe I'd stake some and sell some and stuff like that. That's the way I work. Now, I'm not stinking rich. I don't have a mansion in London. I don't I don't walk around with Armani or crazy suits. I don't have a Lambo, right? I just grind away and live my life. But I am here every day, so that contests to my ability to hang on through all these bear markets, and I do it because I don't take unnecessary risks on Hail Mary buys, right? However, is it a bad idea? No, I can't say that for sure either. Like, I kind of regret not buying Pendle before, or give me a sec. There's quite a few other tokens that I regret not buying or not locking or farming or participating in because, I have expertise that I don't utilize as well as I should. Okay. So anyways, you can check this out. Check out these two tweets by DeFi investor talking about Pendle, and then especially this one. I think Ceazor has a very interesting and valid point here. Okay, moving on. Here we have Fluid. Fluid is a protocol. I'm a little bit biased on this. I lend on Fluid. I don't do a lot of borrowing because I just don't want to borrow, but I probably should think about it. Fluid's one of the few protocols out there, not the only, but one of the few, where you can provide liquidity to liquidity pools and use that liquidity in the liquidity pool as collateral to borrow. And you can even borrow liquidity pool tokens, so you're getting trading fees on your debt as well as trading fees on your collateral, which is very, very interesting and useful. So this is a monthly, like January of 2026. I think more protocols should probably do like this monthly roundup. I also hold some Fluid tokens inside a concentrated liquidity position. So I kind of hope that Fluid will pump, but there's not a whole lot of utility to it. But anyhow, maybe that'll change. You can go through here. It basically talks a lot about the things that happened in January. But there is one key thing that I want to show. Where is it? So Fluid DEX V2 audit contest on Sherlock. So I haven't done a lot of deep diving on this or looking, but basically what I collected or what I gather is that the V2 DEX is going to be concentrated liquidity. So it's going to be even more efficient for you to farm fees. But so if you already use concentrated liquidity as your collateral or your debt, then basically as long as those assets are within range, you're going to farm more APY, and therefore your collateral or your collateral is going to grow or your debt's going to shrink faster, right? However, if it goes out of range, then you're going to farm no trading fees at all. So I don't know. I'm a strong believer in every single token out there should have full range liquidity. It's just my belief. Okay, it's not the most efficient, but you should have something something similar to full range liquidity, so that people can trade no matter the price. And then you can use concentrated liquidity to deepen the current crab ranges. So as a protocol, I think every protocol should have full range liquidity as well as concentrated liquidity for specific areas of desire, whether they want to sell tokens here or buy tokens there, or just provide liquidity around the current price discovery range, right? And so forth. So anyway, so you can check out this. I think this is kind of an interesting article for protocols to start doing in these like monthly roundup type things. And I do see there's a lot more articles coming up on X, which is kind of nice. So you don't have to leave X, you can just kind of stick around. Okay, so I'm going to talk about liquidity again, obviously. I will probably talk about them almost every day so long as they have something tweeted out. And anyway, so here we are. They're kind of rephrasing. I talked about this a couple of days about how Bold is got an A- in the by blue chip org. So the A minus sounds like, because it's a minus, right? Sounds bad, but it's fantastic. Like USDC has a B plus, DAI B plus, and kind of look at the problem. So let's read to these problems. So the problem: all stables share TradFi exposure. Not all of them, but most of them, right? USDC, USDT, the banks. It's basically banks' money, right? Money in the banks, right? Treasuries and in the banks. DAI 60% is backed by USDC and real world assets. So again, that's backed by banks, right? Bank failures, SVB hit them all. So if the banks fail, or if the banks have to close, like the USDC depegged a little while, like a few years ago, because their redemption route through the banks was severed because that bank had some financial problems, or I can't remember exactly what happened, but something like the bank was like closed because of the SEC, or they were targeted and they had to stop doing crypto stuff, and USDC had to scramble to find a new bank to support their redemption methods, right? And that's not something you can do in a day. That takes time, right? So regulatory freezes. So USDC can, $160 million of USDC have been frozen via tornado. So the banks can then freeze your assets if you're holding USDC or USDT, unless you've got them like kind of hidden inside a pool, like a liquidity pool or something. Then it'll be harder for them to freeze. But they can then just monitor your wallet and use a bot to freeze it as soon as you pull it out of the liquidity pool. And mind you, you can maybe pull out the other side token instead. But you wouldn't know that they're going to freeze you. They're not going to send you a message telling you, oh, by the way, we're waiting to freeze your assets. And the government has proven, especially in some countries, that they're willing to freeze people for crazy reasons, right? So anyhow, so Bold is one of the solutions because is 100% backed by crypto, ETH, USD, ETH, WSD ETH, and RETH, and that's it. There's no bank, there's no blacklist features. Yeah, so you can check it out. It's good stuff, man. And it's not the only stablecoin that does this. A fantastic, let's see if they've got a tweet here, if I can quickly find it. Anyhow, so you can check out, it's called Trust Force. Yeah. Trustless Force. So check that out, and there's a couple stable coins that are supported by it, and they have this same ethos of being like on-chain, backed by Ethereum and quality assets, no banking stuff. So you can check out this, give these guys a follow, and so forth. So let's move on. Okay, so the next one we have Crypto Bitlord. I don't know why I keep engaging with this guy. I don't know why I do it, but anyways, so he's retweeting Look on Chain. Look on Chains can be valid, but sometimes I feel like it's run by a bot, because it's like there's no context or no knowledge of what's going on beyond the data that they just share. So here they share Vitalik continues to sell ETH, having sold 495 ETH in the past 8 hours. And then Crypto Bitlord says, imagine being the founder and just publicly dumping ETH for years with no explanation. And then I replied to him, excuse me, he explained it here on January 30th, 3 days ago, exactly what's going on. Like he explains, I've pulled this much ETH. I'm going to be selling it for these two reasons. Like it's all right here. I don't see like his XRP. I don't know. Maybe XRP is disclosing their dumping. Maybe they're not. I don't know. But it's just uninformed FUD, and people just constantly do this all over. I don't know. So anyway, so of course everyone's going to shill their bags, and I'm biased as crap. Like obviously, I'd prefer if Vitalik wasn't selling ETH. But at the same time, the reason he's selling ETH makes a lot of sense to me. To fund the ETH Foundation, to build up the protocol to continue to work on robustness, sustainability, and decentralization, to fund the ETH Foundation so they can do their goals. on and continue to provide security and privacy and self-sovereignty. Like, the reasoning makes sense. Like, you can't look at Vitalik and be like, oh, this guy's just greedy. He's just dumping bags. And he doesn't have a $20 million mansion in London. I don't know what he has. I don't know what he's bought. But you don't see people fudding like Vitalik driving around in Lambos and stuff like this. So, I don't know. I'd rather Vitalik dump on me than whoever the owner of XRP is, or any of the Solana like founders. Like, they're definitely dumping too, right? It's just you don't know they're dumping because they don't disclose things, right? Moving on, last one here. We have Thomas Lee, not drummer, fsinsight.com, fund strat. I'm not actually sure, but I'm pretty sure this is the actual Tom Lee. Maybe someone can tell me. I do say, it does say all that, but you never know. But like, it does say that he is the chairman of BitMine, right? So anyhow, so let's see what he says. Okay, so someone tweets out, BitMining is now sitting at a $6.6 million unrealized loss. So a bunch of FUD on BitMine. And then Tom Lee comes in and engages. Now, I kind of hate that how crypto works. Like, I'm going to read what he says, but I want to talk a little bit. I kind of hate how crypto works. Like, in order for you to get engagement, you have to FUD. So this guy is thinking USD is FUDding BitMine to some extent, right? It's truth. He's not making up shit, right? But it's truth, and he's sharing it. And because he's sharing it, he gets retweeted by someone who has 500,000 followers. Whereas me, I produce content that is like educational and positive, and like I'm trying to help people understand the crypto ecosystem, and I never get retweeted by these kind of people. But anyhow, that's just me ranting and complaining about how Twitter works. But anyhow, let's read what he says. These tweets miss the point of the Ethereum treasury. BitMine is designed to track the price of ETH. Outperform over the cycle. Think up ETH. So the point of it, he's saying here, is like whatever the price of ETH is, it's fine, because the point is to get more ETH, to get ETH into the treasury and to grow that ETH, right? Crypto is in a downturn, so natural ETH is down. BitMine will see unrealized losses on your holdings of ETH during these times. Of course, right? He says, this is not a bug, it's a feature. Shall we call out all the index ETFs for their losses? So yeah, like, there are ETFs of precious metals. Are we going to say, oh, look at all those ETFs? They're garbage, right? They're down, $2 billion or whatever it is, right? I don't know. Or are the S&P? Call them out, because the assets they have inside. So is a bottom line, Ethereum is the future of finance. So what I've read, I'm not an expert, but what I've read and what I've seen him say is that he does not need to sell the ETH. Like, so BitMine is kind of, and I did see today somewhere that ARK Invest has bought a bunch of BitMine as well. So I don't know, she might not be the smartest, right? But she's definitely not the stupidest investor in the space. Her fund doesn't perform the best of all of them, but it's not, we still all agree that she has some intelligence in investing. And she's bought in BitMine. I don't know, but like, what I was going to say was, I don't think he needs to sell any of the ETH. And the people who are buying BitMine, they're not crypto people. They're not, oh God, I'm up 2% today, I better sell, or I'm down 3%, I better panic sell, or I better FUD until my price goes back up. So like, these people who buy into these ETFs and these indexes and stuff like that, they're not thinking in the daily charts. They're not thinking in the weekly or even the monthly charts. They're thinking in the yearly charts. And that's who his product is targeting. So they don't care that he's down like 9 billion, because it's not there. Like, it is there 9 billion, but they did not put 9 billion in there. They all put little bits, and they're willing to take that risk that it goes to zero. They don't want it to go to zero, but they're willing to take that risk and think in the long term. And I do believe that ETH is the future of finance. I agree with this. I don't sell ETH, even though I'm down. I wish sometimes I would trade a little bit more because, if I would have sold 2 weeks ago, I could buy back now and be up a little bit, have even more ETH, right? But at the same time, you never know, right? If you sold 2 weeks ago and then it continued going up, then you'd be sad about that. Anyway, so that's it for today. I hope this has been interesting and useful, and thank you so much for listening, and goodbye.